Wealth Builders, welcome to another real estate drive-by educational video brought to you by the Mills Funding Group LLC, an apartment acquisition and asset management company. I'm your host, Nick Billions, your private money surgeon, and today we're going to talk to you about interviewing property management companies. Now, as a disclaimer, I'm not a lawyer, CPA, or securities professional. This info is purely based off of personal experience and opinion and should be consulted and verified by your attorney, CPA, before moving forward with any mentioned investment strategies. This information is purely educational and not intended to present or market any securities opportunities. Now, for more of what we're doing, what we offer as a company, you want to go to our homepage at privatemoney.vanitcompanies.com. Now, here are the top questions that you want to ask when you're interviewing property management companies for your multifamily or residential real estate projects. How many years have you been in business? Preferred, you hope that you want to see that they've been in business for at least 10 years and can be verified by either some organization, the IREM or BBB, or just looking at their tax returns. How many properties do you own yourself? Now, this is a very important question. It's actually a make or break question. Rule of thumb is if a property management company owns real estate, you don't want them to own, one, you don't want them to own the same type of real estate that you own, and two, you really don't want them to own more real estate than you own, because what they're going to do, especially when it comes to spending money on expenses and things of that nature, what I've seen and heard from some clients and some and just talking through some networking opportunities, that some property management companies will have you to put down a particular amount of money for, say, petty cash or for the expenses, and they will use that money for their own companies, and they will show falsified paperwork showing that they used it for your property, and turns out several months down the road your property is losing vacancies because tenants are not getting their issues fixed or solved, because the property management company is just doing what they want with yours and treating theirs like gold, like they should be treating yours. So that's that's one of those make or break questions that you really want to ask at the very beginning before you go down this list of questionnaire in the interview. What addresses are you currently managing? You want to be able to confirm what they say is true. It's just that simple. Has your firm been sued by one of its clients in the past 5 years? Any special training that your managers receive from your company? And for the on-site manager, who pays their salary? Would it be paid through our cash flow, or do you pay it through the management fee that you receive monthly? What are their duties? Will you provide a written management plan? Can I interview and approve the on-site manager? Because I don't want just anybody on my property. I want someone that is just as competent as I am and cares as much about the property as I do, and someone that's not going to give you such a hard time when you're implementing your system for your success. What fee to charge for finding or installing a new tenant, even if they install or charge a fee for finding new tenants. What percentage of gross do you charge for a management fee? Now, the industry standard is 5 to 8%. 5 to 8% for 100 plus units. If it's less than 100 units, they usually charge anywhere from 3 to 5%, and even some companies charge as much as 10% if it's less than 100 units because of the gross amount anyway. What's included with the monthly management fee? What property management software do you use? You want to be able to use the same software or sync up with the same software so that you can check it remotely, and so that you can come to understand how reports are created. How much time do you take to do a make ready for your apartment? How long does it take to get an apartment ready after a tenant has moved out, or after you have brought one back up to code? Do you own your own repair staff, or do we have to hire maintenance separate from the management company? What's the hourly rate? What's the longest period of vacancy that you've had in the past? And they should be able to show paperwork for it. It shouldn't be something that should be off the top of somebody's head. They should be able to show paperwork showing that how long they've had a vacancy and how long it took for them to get that vacancy filled. What's the typical advertising budget for filling a vacancy? Who handles evictions and at what expense? Can tenants pay with auto withdrawal? who performs tenant screenings, and at what charge? Do you require me or the asset management company or the acquisition company to list the property with you upon its sale? Now, what some management companies know is that investors like us, we buy, build up equity, and then we sell. And they know that usually 9 times out of 10 that when the property is sold, that their services are no longer needed, that the new ownership usually looks for property management elsewhere. So sometimes they may have a clause in their agreement where they say that you have to keep us in the rotation of management after with the sale. We go with the sale, or we can hold the lien against you or something like that, depending on what the clause states. What are some of the reasons that we should use your company? What's your competitive advantage? Why even look your way in the first place? Describe some of your weaknesses and how you hope to improve. This is a pure honesty question right here. We want to make sure that the property management company is not full of it and they're not over expectating and underperforming. Okay, so we want them to explain to us what their weaknesses are and how they hope to improve. It's because their weaknesses now become ours as we get into a relationship of them working for us. Give me contact info for 3 of your current clients who have buildings like mine. We don't want to be your first. We don't want to be your first experiment property. If this is your first multifamily or whatever type of property that you're managing, we want to be sure that someone else has already gone through the trial and error basis of your company, of seeing what to do and how to manage the property and how to manage the tenants. And therefore, we want to have someone that knows what they're doing with this type of property and knows how to get things done, because we don't have time to waste. We're not that type of business, and you should present yourself as the same way. And here's some things that you want to average: $250 a door per unit for the year for maintenance expenses. Now, for bigger properties, $250 a door is good for, say, C class and D class properties, for distressed properties. But if you're doing like B class or A class or even hot or even C plus class properties, you probably want to take the average up to $400 a door, and even more, probably up to $600 a door if you plan on doing capital improvements along with internal unit improvements as well. And you want to negotiate the repair fund upon closing when you're doing contracts, and also if the management company has requires some type of say so in that gathering. All right, that's it. Like I said, drive-by real estate education at its best. For more of what we do, go to our homepage at privatemoney.VineetCompanies.com. You want to subscribe and like our Facebook page at facebook.com/privatemoneysavior, and you want to subscribe and comment and like our YouTube page at youtube.com/Mills Funding Group. Again, this opportunity was presented to you by the Mills Funding Group LLC, an apartment acquisition and asset management group. I'm your host, Nick Billions, your private money surgeon, and I look forward to talking to you soon.